All right, welcome back, everyone. Let's get right into the stock market technical analysis. We're going to go through some charts. I want to look at the bond yields, and the dollar is important. Obviously, that's really a big component of what's going on right now. We'll look at the tech stocks, some of the short trade ideas that I've pointed out in the last couple weeks, and then we'll wrap up. Okay, so we're going to start out today with TNX. This is your 10-year treasury yield. This is basically, there's some big things going on here. So if I go to the monthly chart, I just want to continue to point out, this is going back to 1981, and we have had dropping interest rates for, basically since 1981. Every single time there's been a recession in the economy and a bear market in the stock market, the Fed has come in and cut interest rates, and they've done that since 1981. Okay, well, this is COVID. As I zoom in, this is basically COVID, and this is the price channel we've been in. We dropped way below that price channel. The Fed basically went crazy on their, just their stimulus, and we're kind of reverting back to the mean. But this, you can see what's going on the month so far. We are breaking out of this downward channel and starting a new bull market in interest rates. So that means interest rates continue to rise. Now, this is very negative for the economy. For one thing, we haven't had this high of interest rates on the 10-year treasury since going back to 2009. Okay, so basically right around 2009, 2008, that's where the Great Recession, started. When the interest rates were right in that area, the Great Recession back in 2008 had really started. And that was supposed to be the worst recession that we've had since the Great Depression. So we have interest rates that are rising to those levels. If the interest rates continue to rise much beyond where they're at, there's going to be some major problems in the economy, including pension funds breaking. You're going to see, a lot of these zombie companies that have been allowed to operate for the last 20 years trying to go out of business. There's going to be massive job losses, no borrowing whatsoever because the interest rates are going up so high until the asset prices correct. That means housing has to come way down. The market has to continue to come way down. So that's kind of what's going on the interest rates. When I'm looking at the TLT, actually, before I do that, let me flip back to the TNX. I want to go down to the weekly chart here because that was a monthly, and that's obviously bigger picture stuff. When I look at the weekly, you can see we do still have negative divergence on the weekly chart. So as I zoom in on the RSI, you can still see that there it is, negative divergence. However, we are pointed straight up right now. So if we continue higher, we burn through the divergences on the weekly chart. That's going to be pretty negative for the economy and for the market. Okay, that's going to tell you that interest rates are likely going to go much higher. I don't think that's going to happen. I think we're probably going to continue this negative divergence. If we go down to the daily chart, you can see here on the, and again, this is just the RSI. You can see we still have negative divergence, but just barely hanging on to it, all right? We go much higher, and we're going to burn through those negative divergences, and that's going to be bullish for rates and bearish for bonds, and ultimately very bearish for the markets, okay? Okay, so that's interest rates. Let's look at TLT. This is your bonds. As I look at the daily chart here, you can see we do still have bullish divergence right there, all right, on the RSI, and it is there on the PPO. So as we continue to fall in bonds, we are putting in bullish divergence, but there's no buy signals. There's nothing telling me that we're done heading lower. So we need to see some sort of reversal candlestick, some sort of breakout of this downward trend on the daily chart. We start to see that, then interest rates should start to come in and the market will probably hold up. Now, I think it's going to happen, but that doesn't mean I don't think it's going to happen before the markets hit our targets. Okay, and so let's go over to triple Qs. This is our tech sector. And again, you can see here on the, this is a daily chart. We're pretty much right down near the June lows. I think we're probably going to take those out pretty quickly, and if we break below, it should be a pretty swift drop right down to our target of 238. I have it about 238 right now on the triple Qs. That's your pre-COVID highs, and that is where I think the Fed is likely going to step in and do their pivot. The Fed cannot continue to hike interest rates. Just the economy can't hold up. Everything will collapse. So I think they're likely looking to push the market down a little bit more, and the market will sell down, and then they're going to come out and do their pivot. All right. That's what I'm anticipating, only because I know that the reality is the rates can't go that much higher without just everything collapsing. And so I'm betting that the Fed's not going to let everything collapse. They're just trying to take some pressure off of the inflation trade. And in order to do that, they need to have the markets come down some more. And that is what I think they're trying to do. So if I go down to the hourly here, you'll notice here on triple Qs, on the RSI, still have that bullish divergence. There it is. See how momentum is still kind of holding in there on an upward trajectory, and yet price is going lower. We also have this, what looks like a bullish falling wedge pattern. Okay, so bullish falling wedge on this hourly chart. We still have bullish divergence on the RSI, but if you go to the PPO, that's pretty much been burned through. All right, it's no longer there. So we're, just the fact that we had the bullish divergence on the PPO, it used to look like this and we burned through it. That's continuing to look bearish. Much more downside will burn through the RSI, although we do have kind of a bullish pattern there right now. So there is the potential for kind of a small rally, maybe up to about, this 285, 80-ish area. Looks like that's kind of the area where we had some reactions right up in there. So could rally up there. It's completely possible. But this is shorter term stuff. That's only on your hourly. You go back to the daily. Still looks like we're, pretty much poised to have that drop down to those final targets. S&P 500, again, right down here near our former June lows. Maybe you get a little bounce here. They're going to probably try to look like you're going to have a double bottom or something. On the hourly chart, taking out the PPO bullish divergence, that is no longer there. And RSI is just barely hanging on to it right here. All right. So again, mixed kind of signals. We could get a small rally here. It is completely possible. In my book, the rally is a sell the rip event. So any kind of rallies that we get should, in my opinion, be sold for lower prices in the future. Let's take a look at some of these. Let's look at the dollar. Okay, the dollar is kind of key right now for what's going on. So here's the dollar futures, and you'll see here on the daily chart. The RSI, let me zoom in on that one. We are just barely hanging on to the negative divergence. Any higher in the dollar, and we're going to take out that former high right there. So just barely hanging on, pointed straight up, no confirmation. So we need to see if this can start to turn down or not. All right. Until then, it's the dollar's pretty much gone parabolic, and this really can't last without major things breaking down in the system. So we'll see how that plays out. And then on the PPO for the dollar, still have that negative divergence there, although pointed straight up. So kind of a similar look. The dollar continues on this daily chart to climb this bullish trend, and we have no sell signals at all. We have negative divergence just barely with zero sell signals. So there's nothing to do here on the dollar, but just kind of watch. But, I suspect if the dollar goes much higher, we're going to have some real problems. Looking at gold, which is really kind of priced in dollars, you can see we recently broke this support level of 1680. I kind of called that out as a key level of support. It's been broken, and we're heading lower. When I look at the RSI, we do have bullish divergence, but again, just barely hanging on to that. So we need to see gold start to turn up, and that's not going to happen unless the dollar starts to turn down. And then on the PPO, you can see we still have the bullish divergence as well. We just keep kind of moving the trend line down, but it's pointed straight down. So again, nothing's really telling me that it's time to get into gold as the dollar's surging. I just don't see an end in sight yet. So we're just watching that one. Now, if we see the dollar start to turn and do maybe a reversal here pretty soon because the Fed or, the European Union or something comes out and they're doing rate adjustments, then maybe we'll get a false breakdown in gold and gold can recover the 1680. And if that happens, then this is a bear trap. I think there's definitely potential there, and that is what I'm looking for, but I don't see any reason to take action yet. When I look at the miners, again, they continue to drift lower. Here's GDX making a new low over the last 2 days. When I look at the RSI on the daily chart, you can see we still have that bullish divergence. All right, but we are pointed straight down right now, so much lower. We're going to start taking these out, but we still have it right now. And then on the PPO, we still have the bullish divergence there. So each new low in the miners here is a divergent low. Tells me that we're likely coming to the bottom of this price action, and we're nearing a bottom, but we just don't have that event, that trigger, that catalyst that tells us, okay, now it's time to start taking positions. So until I see that, we're just going to let this do what it wants to do and keep an eye on it. Okay, let's go through some individual trade ideas that I've talked about in the last few weeks, and we'll wrap up. Guys, if you guys are finding value in the content, feel free to drop me a thumbs up or leave a comment. Also, if you're interested in learning this as a skill set and interested in learning how to read the charts, how to put it together to find high probability trades, then take my stock market technical analysis course. Link in the description below. I put that together about a year and a half, 2 years ago at the request of my subscribers. And that's all the information that, I really try to teach in how to analyze charts and how to find good high probability setups. Okay, so link in the description below. It's not a day trading course or anything like that. It is essentially just, it's a course about how to look for good setups, how to find charts, how to have good risk reward analysis, trend line analysis, divergence analysis. I put together a full checklist on really items to check on your trade setups to make sure that you've got the best probability of having a good trade. And it's all in the course. So check that out. Link in the description below. Finally, if you're interested in getting additional trade ideas, trade setups, market insights, actionable items that I see in the market, join the private membership group. There should be a join button next to the subscribe button. If you're on an iPhone, you need to go ahead and hit the link in the description below on joining the private membership. All right, so that's available. All those tools are available if you're interested. Let's continue. Tesla. All right, so Tesla had a sell signal on the daily chart on Friday. You can see here, see this trend line right here on the daily? So we had a negative divergence on the daily here. So we had basically divergent high 1, divergent high 2. We then sold down to the trend line and broke it on Friday. All right, that's kind of key. If I go down to the hourly chart, you'll notice that, there's your break on Friday. All right, that was your sell signal. Today, they ran it up and did a back test and it got rejected. So we'll see how we close the day, see if they want to try to make this a false breakdown. I suspect it will continue to sell down and head lower. Next level of support that I see on Tesla is really down here at about 250, 259-ish. But at the end of the day, I don't think we're going to hold there too long. I do think Tesla's heading down all the way down here to 184 as our next level of kind of more major support. Okay, the negative divergence on the daily chart usually indicates you're going to get a lot larger move than just a little move down. The daily divergences typically play out for swing trades or trend trades that can last weeks to months, and that's what I think we're on right now. So again, had the sell signal on Friday. We'll see if that confirms. Maybe it wants to sell off into the close. That would help confirm this one. Starbucks. So Starbucks on Friday hit some support right here, and I talked about that level probably being an area where we'd get a little bounce. 83, we are bouncing. We have bounced off of that so far. Starting to sell down. I don't know how much more downside is left in Starbucks. I think we could get down to here about $80 for the next level of pretty decent support. And that's likely about as far as I'm going to let that one go. Obviously, it could go a lot lower, but the projected target that I've had right now for the entire time of this trade is at 80. So I did take some off, took about half my short trade off on Friday as we hit that support. And then I'll probably look to just take the rest off as we, or if we drop down to this $80. That's all I have on that one. Run. Okay, so run is continuing to sell down. And we have the 200-day moving average right down here. So they'll probably bounce it. But I don't know. You can see we already hit it once. We bounced. We're coming down to it again. Maybe we'll break through it. I do think we have a good probability of breaking down through it. And if we do, it should be a pretty quick move down. There's a gap to fill right here on run. You'll see it right. Let me clear this up right there at 24.30. So we break the 200, probably going to have a swift drop down to that gap and fill that gap. For me, that's the trade as of right now. We'll cover the short trade right there on run down there. And that would be a trade, of about 30% in a matter of maybe a week and a half or so, depending on, when we can get down there. So I like that. Obviously, there's a lot of potential for a lot more downside, but for now, that gap fill is going to be our target. Okay, and very similar to run is FSLR. Talked about this one for a while. They're still battling it out on this one. If I go down to the hourly, you can see this was kind of your former support. It's about 130. We just traded here for a little while. They've been back testing it, but still below there. So I suspect we'll fail, continuing lower. Looking at the daily, we have negative divergence, just barely, but we had it, and clearly on the PPO. So we just need the momentum to start to pick up to the downside. Yeah, nothing more to say. The target for this one is down here at 78, and that is pretty much all we have. All right, and also, we did have this trend line to watch here. We've now got a third reaction, so I think that's going to play in as resistance. You can see all this price action where they were testing this trend line, but it was building negative divergence at that time. So I do suspect we start to work our way lower, and the selling should intensify the lower we go as we roll down to fill the gap about 78. AMD continuing lower. We're looking at a daily chart here. Again, I talked about the thin zone on this one. It's marked here in green. The bottom of the thin zone is about 59.75 or so. We are just, looks like we're just continuing to drop through that zone. So again, 59.75, $60, somewhere right in there would be the target for now. We're about halfway there. It still looks good. Qualcomm, very similar setup. This is also a semiconductor. On Qualcomm, I've got it marked out here at 123 as a zone of support. So this was resistance once we hit it back here in 2020. Once we broke above, it's been support ever since. Support here, 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 there, even there. We undercut it a little bit, but they recovered it. And you can see where we're at now, so are we going to have another whipsaw where it basically has a false breakdown and then recovers? That is possible. We'll keep that, we'll stay open to that. Or do we actually break down and, start to sell down? If we break down, next level of support on the daily, kind of a minor level, but we probably get a small reaction about 110, 109.90 is where I have it. We break below that, it should be a pretty swift move. And ultimately, this is my target, my final target for this one. I do think we are heading down here, and it is about $94. So 94 on Qualcomm. Still looks good for more downside. And the selling's not going to be finished in the market until we see Apple sell down. So Apple's the beloved stock of, all the hedge funds, all the index funds. Essentially, all the bullish funds are... Apple's kind of one of their key holdings. So you're not going to have a capitulation in the market and some sort of a selling climax until you see Apple sell down. So we definitely want to keep an eye on that. Right now, I've got some support. We've got a downtrend line to watch on Apple on this daily chart. So we've been walking down this trend line. There's also kind of minor support right here, about 150, 130, and we're pretty much trading right there. As you zoom in, you can see we've been there we've had a couple reactions here for the last few days. We need to see, more selling and this continue to break down. Apple, if I look at the weekly chart, if you want to look at kind of the longer term setup in Apple, this is your bullish trend that's been in play in Apple since 2010. Basically, the entire bull market, going back to the Great Recession, this is the bullish trend of Apple here. Now, when COVID happened and the Fed went crazy, a lot of that money flowed into Apple, and it caused this kind of breakout out of this trend. So we want to go back and watch this trend for kind of an area for this Apple to mean revert, to fall back to where it should be. The first level, obviously, in this, we're talking about bigger picture stuff, but is the top of the trend line right here. And that puts Apple falling all the way down here at maybe 105, 110, 112. It depends on when it gets there. That would be the top of the trend line. So you'll probably get a reaction there for sure. Could last days to weeks. And then ultimately, I think we're going to break back into the channel. And if you do that, you have a very high probability of falling to the bottom of the channel. Okay, so those are my two targets in Apple for right now. Top of the channel and bottom of the channel. And, you know, just to get down to the top of the channel from where we're at right now, Apple needs to fall 30%. All right, a 30% drop in Apple. And to the bottom of the channel, depending on, of course, when it gets there, that's about a 50% drop in Apple. So clear bear market in Apple if it does that. And that is my old, you know, that's kind of my longer term target for Apple. The other thing is, you'll notice on this weekly chart, we have negative divergence that's been building for quite a while. So this has not been taken out. This divergence is just indicating that, okay, this trend is going to lose momentum. And when it starts to lose momentum, this is a trend that will last for, you know, potentially, you know, many months to years. All right. On the weekly chart, negative divergence, these can play out for many months to years. So that's kind of what I'm thinking in Apple as we continue to move lower, bigger picture, down to these areas of support. Okay, that's all I have for today. I'm obviously continuing to scan for charts, looking for additional trade ideas. If I see anything that pops up throughout the day, the private member group is usually the first to know about it, so I post there first, and then I will just catch you guys on the next video. All right, bye.